Banks are foundational pillars of the global financial system, serving as intermediaries that facilitate numerous transactions and activities essential to the functioning of modern economies. From individual savings accounts to vast investment portfolios, these institutions manage and maneuver funds in ways that touch nearly every aspect of our daily lives. Banks play a pivotal role in modern economies. They act as intermediaries between savers and borrowers and facilitate various financial activities for individuals, businesses, and governments. Here's a basic breakdown of how banks work. 1. Accepting deposits. One of the primary functions of banks is to offer accounts for the public to deposit their money. These deposits are liabilities for the banks, because they owe this money to the account holders. 2. Making loans. Using the money deposited by savers, banks lend money to borrowers who need funds for various purposes, buying homes, starting or expanding businesses, education, etc. These loans become assets for the banks, because they earn interest on them. 3. Reserve requirements. Not all the deposited money is lent out. Banks are required by regulators to hold a fraction of their deposits in reserve. This is to ensure that they can provide liquidity for depositors who want to withdraw their funds. 4. Interest rate differential. Banks generally pay a lower interest rate to depositors than they charge borrowers. This differential between the interest they earn on loans and the interest they pay out on deposits is a primary source of revenue for most banks. 5. Other services. Besides basic depositing and lending, banks offer a wide variety of services such as currency exchange, investment advice, wealth management, insurance, safety deposit boxes, and more. 6. Fees and commissions. Banks charge fees for many of their services. For instance, there might be fees for maintaining an account, overdrafts, wire transfers, and more. 7. Safekeeping and transfer of money. Banks provide safe storage of money and facilitate the transfer of money between individuals and businesses through mechanisms like checks, electronic transfers, and credit card transactions. 8. Monetary policy and regulation. Central banks, which are usually government-owned or affiliated, oversee and regulate other banks. They set monetary policy, which can influence the amount of money and credit in the economy. Central banks might use tools such as setting reserve requirements, open market operations, and setting short-term interest rates. 9. Creation of money. Because of the fractional reserve banking system, when banks lend out money, they effectively create new money. When a loan is given, the borrower gets money, often as a deposit in their account, but the bank still counts the original deposit as part of its reserves. This means that the original deposit and the loaned money coexist, increasing the money supply. This concept is a bit abstract and is often debated in economic circles, but it's a key aspect of modern banking. 10. Risk management. Banks face various risks, including credit risk, borrowers not paying back, liquidity risk, not having enough cash on hand for withdrawals, and market risk, losses from changes in market values. They use various tools and practices, like diversifying their loan portfolios and holding capital buffers, to manage these risks. 11. Financial intermediation. By gathering funds from savers and lending to borrowers, banks facilitate the efficient allocation of financial resources in the economy. This helps in the growth and development of industries and sectors that need capital. This is a simplified overview, and the banking sector can be more intricate, especially when considering global operations, investment banking, various financial products, and more. However, the primary essence of banking revolves around the central principle of accepting deposits and making loans. In conclusion, banks are more than just places to store or borrow money. They are complex entities that drive economic growth, facilitate global transactions, and act as stewards of people's hard-earned savings. Their multifaceted operations impact individuals, businesses, and nations alike. As the financial landscape evolves with emerging technologies and changing regulations, banks will continue to adapt, yet their foundational roles in the economy will remain indispensable. Understanding the intricacies of their operations allows us to better navigate the financial world and make informed decisions. I hope you have learnt something valuable from this video. Please don't forget to like, subscribe and hit the bell icon, so you don't miss any future content about money-related stuff again. Goodbye.